Hi there, good afternoon. You're watching Market Fatafat on ET Now. I am Snehi Shah. This is a show where we'll be taking you through all the big buzzers in today's trading session, tell you why the stocks are in focus in today's trade, and also bring on a technical expert to give you a tech check on some of these stocks. And on that note, first of all, let's revisit the markets. We're now below the 23,500 mark as well. So it's been a very sharp seller from the day's highest point, a 150-point cut coming in from the day's high, and it's a cut of 0.6% from the day's high, 0.4% cut coming in on the spot. Let's pull up the Sensex and take a look at what that index is up to, because last half an hour or so we have seen quite a steep cut coming in on Sensex as well. Very close to the day's low is the Sensex, and 0.4% cut coming in on the Sensex as well. Let's take a look at what the broader markets are up to, because they have been largely bucking the trend, and an uptick coming in on Nifty mid-cap is what we were seeing an hour ago. It has reversed all of those gains and in fact slipped into the red territory. That's the mid-cap index, and small-cap absolutely flat and lackluster at the day's lowest point when it comes to both of these broader indices as well. Nifty Bank, let's take a look at what Nifty Bank is up to, and that also joining its peers in the red. A 0.2% cut coming in on the Nifty Bank index as well. The advanced decline ratio has now tilted in the favor of the declines, but India Wix continues to be lower by 4.5%. So looking good at least on that front. Some top Nifty gainers today: ONGC, Tata Consumer, Kotak Bank, Jio Financial, the new entrant in the Nifty, and Apollo Hospital looking good right now. On the flip side, pressure being built by IndusInd Bank, Shriram Finance, Wipro, M&M, HCL Tech. So it's largely these banking and IT names that are under steep pressure in today's trading session. Sectorally, let's take a look at what's been doing well. It's only the FMCG index and to some extent Nifty Financial Services that's in the green. Everything else is in the red. Nifty Media and IT are your biggest losers in today's trade. On that note, let's welcome Arpit Beriwal, Manager Derivatives Analyst Equity Research, Motilal Oswal Financial Services, on the show to give us a technical check on the stocks that he has picked out for us. And Arpit, Bajaj Finance is the stock that you've picked out for us. First of all, good morning. Tell us what Bajaj Finance is looking like on the charts to you right now. Why have you picked up this stock? Because last 6 months the stock is up almost 16%. Year to date the stock has done well. Last 1 year also pretty decent return. So do you believe that this positivity that the stock has been seeing for some time will sustain on the charts, or time now for some slowdown?
Very good afternoon. So if we talk about over the financial pack, financial pack as a whole has been a huge outperformer in last couple of series if we see, and mainly if we see from the March lows to March highs, mainly the rally has been driven by the financial NBFC space and the banking space. So if you look at the closely the technical setup of Bajaj Finance, purely from the chart perspective, in the January series this year, it has given a range breakout of almost last 2 to 3 years. After 36 months, a range breakout above 8,200 levels, and since then the stock has been moving slowly, gradually higher. On the weekly setup, if we talk about the structure, it was consolidating from mid-Feb to mid-March in between 8,000 to 8,600 levels, and then again it has given a fresh range breakout above 8,750 levels. So looking at the chart setup wise, as NBFC is the theme, and going forward also we're expecting outperformance. Bajaj Finance is likely to be outperforming going forward, and within the NBFC space, this is a top pick. Slowly, steadily, we can expect another good 7 to 8% rally in next 2 to 3 months time frame. So from positionally also, we can expect good up move towards 9,300, 9,500 plus levels. On the immediate basis, 8,750 is a major support zone. Till it closes above that, a bias should be positive for new life buyers.
Okay, so that's the take on Bajaj Finance, and that's the top pick coming in from the financial space, at least for Arpit on the charts. Let's move on, talk about a high flyer in today's trading session, and that's BSE. That's the stock that we are talking about. Now remember, the shares of BSE surged as much as 17% in the first half of the trading session, and it's not given up much of its gains. It's still trading with gains of 15.5%, so looking good for BSE today. And it's also the top gainer on the Nifty 500 index. The move comes after the market regulator SEBI, in its consultation paper last evening, proposed to keep all equity derivative contracts expiry either on Tuesday or Thursday. Now, in response to this, the National Stock Exchange has deferred its plans to change the day of its contract expiry to Monday from the current Thursday, a move that it had announced earlier this month. Now, what to expect now? As per Jefferies, they believe that this may abate concerns around BSE's potential loss of market share and impact the EPS. That's your estimated impact is roughly 12% on BSE's on NSE's EPS, and clarity on open interest limits is awaited, but impact of that is lower for BSE, so that's looking good. And stock has retraced its majority of its fall, and risks and better markets can aid re-rating for the stock. So So, slightly positive note coming in from Jefferies on this entire development when it comes to the changing of the expiry day for the derivatives. But on that note, BSE is up 15.5% as we speak. A very sharp move coming in for BSE in today's trade. But Rabinder, coming to you, another high flyer that you've picked out today is NHPC. It's on the back of a brokerage note. Tell us what the note entails.
Well, NHPC in focus, where CLSA has come out with their note on NHPC, and they have given a high conviction outperform rating with target price of rupees 117. They say that the NHPC is set to commission its Parvati 2 hydroelectric project in early April, and NHPC have achieved 50% of capacity at 110% loan at 12 hours, and the rest of the capacity should be ready by March end. This project will expand NHPC's total capacity by 11.5% and stand it regulated entity by 26%. Looking ahead, regulated entity earnings excluding minority are projected to grow by 113% from FY24 to 29 against 2% growth over the last 5 years. They say the CLSA is expecting EPS growth EPS to increase by 79%, while ROE to expand by 512 basis point between FY25 to 27. So on back of this news, stock is up over 2.5%.
Okay, so that's the take coming in on NHPC. Let's move on from that. And Arpit, you've picked out Interglobe Aviation on the charts for us. Last 1 year has been a very good year for the stock. The stock price has gone higher by more than 40%. Tell us what this year, then especially now FY26, what does that entail for Indigo on the charts, and what are the next levels that you're watching out for?
If you talk about Indigo, technically, if you talk about the last 6 months especially, we have seen a very sharp correction in the broader market, but this counter has been a huge outperformer. So if we see the chart setup on the monthly scale, after a huge consolidation between 5,000 to almost 4,000 for last 7 to 8 months, this month there's going to consolidation breakout on the monthly and the weekly scale above 5,000 levels. On the monthly chart, a strong bullish candle, and look at the chart setup wise on the weekly scale also. Previous it surpassed 5,000 levels, and the good part is that it is holding above 5,000 levels. So the base of the stock is shifted higher from 4,600. Now the new base is around 4,900, 950 levels. And look at the chart setup wise also. Since morning we have seen some price action on the life fidelity that clearly indicates that the outperformance is going to continue. And this is also one of the top pick within the mid cap space. And we are expecting good 5 to 7% rally from here on also towards 5,250 or 5,350 levels. So Indigo would be a buy at current levels or minor dip in between 5,050 to 5,080 with major support around 49.50 for an upside move towards 53.50 levels.
That's the take coming in on Interglobe Aviation. Let's move on and talk about the IT sector that's currently ailing in today's trade. This is on the back of a Goldman Sachs note coming in wherein they've downgraded LTI-Mindtree to neutral from buy with a revised 12-month target price of 4,500 rupees earlier, 4,500 rupees now compared to 6,570 earlier, and they've given reduced near-term growth and margin visibility due to the company's higher discretionary exposure versus its peers, premium valuation versus sector, and a more balanced risk reward. That's LTI-Mindtree that we are talking about. So big cut coming in on that stock. They continue to remain buy rated on TCS and Infosys. They see the buy rated TCS as better positioned versus the rest of the coverage given the company's diversified revenue base, potential tailwinds from vendor consolidation, and reasonably high margin visibility. They continue to remain sell rated on both Wipro as well as Tech Mahindra. So let's put up the charts of Wipro and Tech Mahindra because currently both of those stocks are bleeding away in today's trading session. Wipro particularly as they see a relatively higher negative impact on these companies from growth headwinds and potential vendor consolidation. Wipro is lower by almost 3% as we speak. They continue to remain neutral on HCL Tech. So that's the note coming in from Goldman Sachs on the entire IT space, and cuts coming in across all of these stocks that have either seen a downgrade in rating or a reduction in their target price. Let's move on from the IT space and talk about the telecom sector. And Arpit, Bharti Airtel is the stock that you've picked out for us. Let's put up the charts for Bharti Airtel because last 6 months the stock has not done anything at all. YTD also not all that much happening. Last 1 year, however, has been a good run for Bharti Airtel. On the back of the technical thrust that the stock is seeing on the charts, what are the next levels that you're watching for?
If you talk about Bharti as a chart structure wise, as we have seen correction from the September 2024 in broader market indices, but Bharti has been a huge outperformer. So if you look at the monthly setup, for almost last 6 months, the stock is consolidating between 1500 to 1700 levels, 1750. And this month we have seen a strong recovery from lower levels of a strong bullish candle, today being the monthly close. So definitely a strong bullish candle on the weekly setup also. The base of the stock has shifted higher. So it is broadly moving in a channel, but the good part is that even if it's declined, the multiple supports are intact at lower zones near 1550, 1600 levels. So going forward, we're expecting a closing above 1750, 1716, can definitely head towards 1850, 1900 levels in next couple of months view positionally. So looking at the chart specific wise, it's quite strong at current levels, and this would be a preferred pick within the telecom space. So definitely it's a add-on stock on the buy and dip stock within 1720 to 1730 range, with keeping stop loss of 1675 for an upside move towards 1800 and then 1820 plus levels.
Okay, so 1800 and 1820 plus is the level that Arpit is watching out for Bharti Airtel. On that note, we'll slip into a very short break, and Arpit and Rabinder will stay on with us on the other side as well. So you stay tuned and we'll be right back. Hi there, welcome back to Market Fatafat. Time now to keep going with all the big buzzers in today's trade. Rabinder, coming to you. Avenue Supermarts or D-Mart, as we know, it is the stock that you've picked out for us. Stock was holding up well in the first half of the trading session, and that was, afloat on the back of a brokerage note coming in. Tell us what the note entails.
Well, there are two news there. Avenue Marts is in focus. First, the Avenue Marts has added 3 new stores in their portfolio in Maharashtra, Karnataka, and Andhra Pradesh. With these stores, the total number of stores stand at 402. And there are also brokerage note coming in where CLSA has maintained their outperform rating with target price of rupees 5,360, which is 32% upside. They say that as of March 27, DMart added 15 stores in Q4, bringing this to FY25 total to 37, and they expect to add 10 more stores in final 4 days of the year. They say that the company is well poised to accelerate store expansion, aligning new openings with cash flow from previous year and increasing presence beyond metro and tier 1 cities, benefiting from lower property cost and reduced competition from the modern retail formats. They say that the staple consumption remains steady, and stores in smaller towns are likely to deliver higher returns, and DMart remain top picks in the CLSA list.
Okay, so that's a bullish note coming in from CLSA on Avenue Supermart, but that stock is fizzled out and given up all of its morning gains. But Arpit, coming to you, JSW Steel is the chart that you've picked out. YTD basis also, last 1 year basis also, very decent gains coming in for JSW Steel. What's the outlook on the charts going ahead, and what are the key levels that our viewers should watch out for?
Going forward, if we talk about the overall metal pack, metal index have seen a quite outperformance in the last couple of series. And if we talk about the JSW Steel, technically on the monthly scale, this is one of the counter. This is a strong uptrend. In spite of all other counters within the metal pack, has been kind of a sideways to downtrend trend. So if I see from June 22 till now, so far the base of the stock is shifting higher. It is perfectly respecting to its rising trend line, and on the monthly scale, it has negative formation of lower highs, a strong bullish candle and life high retreat. On the weekly scale, also it's giving range breakout above 1000 levels, 1020, which was the earlier hurdle zone, and now comfortably trading above 1020, 1030 levels. So overall, look at the chart setup wise, the base of the stock is shifted higher. And looking at the setup wise, in spite of some market weakness and some choppiness, the stock is comfortably trading in its life high territory. So positionally also, we can expect good 8 to 10% move in next couple of months of view. Immediate basis 950, 960 is a major support zone for the stock. On the upside 1100, and then positionally 1220, 1250 would be the levels to watch out for.
Okay, so those are the next levels to watch out for JSW Steel. Let's talk about BHEL, and the company has received a letter of intent from the Chhattisgarh State Power Generation Company for the EPC package of the 2x 660 megawatt Korba West Supercritical Thermal Power Plant. The project, valued at nearly 11,800 crore rupees, is located as the Hasteo Thermal Power Station in the Korba district of Chhattisgarh. The scope of the project includes the supply of supercritical equipment such as the boiler, turbine generator and associated auxiliaries, and BHEL will also be responsible for commissioning as well as civil works, and the project is slated for commercial operation within the next 60 months. So massive order win coming in for BHEL. The stock is also off the day's highest point quite significantly, but nonetheless a half percent uptick coming in on BHEL. Arpit, coming to you, Chambal Fertilizers is the stock that you've picked out for us. You know, a lot of people are picking they're talking about RCF. In fact, when it comes to the fertilizer space, we've not heard much on Chambal Fertilizers. Are you bullish on this stock? And if so, what are the next levels that you're watching out for?
If you talk about overall the chemical and the fertilizer space, very selective counter has been outshining. Apart from Chambal, one more counter is SRF. So if you talk about Chambal, slowly, steadily, it is trading at life high territory, where the mid cap index is almost down still 8 to 10% from life high territories. So technically on the monthly scale, the stock has given a classical pole and flag breakout above 585, 590 levels. A strong bullish candle on the monthly scale, holding above 600 crucial levels. On the weekly setup also, a range breakout above 595, 600 levels. So look at the chart setup wise on all the time frame analysis, the stock is in clear uptrend, and definitely there is a further up move going forward, that the stock can head towards 700, 720 plus levels. So overall the bias is positive. Stock can be buying overall in tranches or in buy on dips, with a major support around 585, 590 levels. On the upside, 700, 720 would be the positional target for this counter.
Okay, so that's the take on Chambal Fertilizers. Ravinder, BEML in focus. I believe on the back of an auto win, it's a positive news flow. Tell us what the news flow here is.
Well, BML is in focus, where company has secured a contract from Bangalore Metro Rail Corporation Limited for design, manufacture, supply, installation, testing and commissioning of standard gauge metro cars and training for personnel, including comprehensive maintenance up to 15 years under the Bangalore Metro Rail project, and the value of the project is approximately 405 crores.
Okay, so that's a positive news. So for BEML, and the stock is managing to hold on to some decent gains amid a market that's largely consolidating. But on that note, I'm afraid that was the last stock that we could squeeze onto Market Fatafat. On that note, Arpit and Rapinder, thank you so much for joining us and sharing your outlook. But on that note, we'll wrap it up on this edition of Market Fatafat from me and the team that put this together. Thanks so much for tuning in.
In association with SBI. Be alert.
If you like this video, then like, share and subscribe to ET Now.